The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome to a beautiful November 20th, 2012. Another great day at your headquarters of technical trading and investing, TFNN.com. Oh, it's a beautiful day, and today is Name Your PC Day. A lot of people don't name their PCs. I think it's sad. I think it's downright close to computer abuse. I've always said if people treated their cars like they treated their computers, everybody would be over on the side of the road with their hoods up. Never change your oil. Just use it until it blows up and then fix it. These poor computers, they labor away all day, tirelessly, never complaining, but people never maintain them. They don't put in their updates. They don't back them up. How sad. But anyway, name your PC. Mine are all named after my favorite characters from Dilbert. There was Catbert, the evil HR person. Dogbert, my favorite. Ratbert, my second favorite. Of course, how could you miss Dilbert himself? But what a great deal. I mean, this guy, if you want to talk about a racket, he starts a cartoon. He gets everybody in Silicon Valley to email him stupid stories of what their moron bosses were doing. He had more material. He said he could have done 5 or 10 comic strips a day with the material he was sent in. Some of it was so good or that he ended up writing a lot of books, ended up being an animated series. I think kind of the end of the dot-com bust kind of took out Dilbert to some extent, but still good. I like my little cartoon here from Dilbert. Starting today, all passwords must contain letters, numbers, doodles, sign language, and squirrel noises. But the guy that I always remember was a manager because he had to have manager hair. People all know what manager hair is, don't they? You got to have that manager hair. You got to look like you're impotent. Anyway, we're having a great day out here. I haven't checked here in the last little bit, but market had come up and ticked up a little bit higher in the S&P. We got up, I didn't think we were going to make a higher high today. We did by a couple of points. But resistance is going to be very strong at that 1387. We're back down to 1382 on fairly light volume, which, like I said, you don't want to be on the side of light volume. You probably don't want to be short either. There's probably not a lot of great money to be made, but we're going to work on things just like spring training. You're not going to win the baseball game today, I don't think, but we're going to start learning things and knowing what to look for and start tracking stocks that we're going to make money on. And I suspect it's probably going to be next Monday or Tuesday. I think we're going to have some real action in this market the way it's setting up here. We've got a very, very low bounce and not enough to go short. And certainly, other than playing a one-day bounce in the market or maybe a day-and-a-half bounce in the market, I think that's all you're going to get out here. There's just not a lot of money to be made. And I don't think the risk-reward is out there for being long or being short right now. It takes a little bit of time for oversold conditions to burn off, and that's what we're doing right now. Market was doing okay until Bernanke came out. Uncle Ben's threw around some of his contaminated rice, and that's all everybody in the market needed, and started selling off down about 5 points. Is it the end of the world? No. We got 2.1 billion shares. What you don't want to see is this volume get up to 3.5, 3.6 billion shares on the consolidated tape before the end of the day. And we continue to see, some news out there that just isn't very good, let me put it that way. So we're going to take a look at it. You can always give me a call at 877-927-6648, 877-927-6648. I have a question then. Is it a good time to add to Apple, Dave, short term? I just don't like the risk reward here. The one of the things I believe in is that you shouldn't be trading all the time, and that's one of the things that we're going to talk about today, especially if you're trading options. But we're going to get into that fairly deeply. I think it's one of the better shows that we're going to have here. We are going to get through the news first, and you have that breaking the law. Probably about 15 seconds to that. Get my head right in the right place. Breaking the law, breaking the law. Now, this is a long lead on it, though, isn't it? We have to wait a little bit till we get in that breaking the law. There we go, Judas Priest. But we still got to get into that, don't we? It's going, I want to wait for that little part of breaking the law. Breaking the law, breaking the law. Yeah. There we are. Breaking the law. We got a lot of lawbreakers out there today. And first one is the UBS trader from last year was claiming that he was basically put up to betting about $2.3 billion. And apparently there just wasn't a lot of oversight, which is beyond me. He's basically about halfway through the trial, went ahead and confessed. He's going to be sentenced fairly soon. But, listening to this guy talk, I'm kind of surprised that they let him have any money to trade. He didn't really seem like the most intelligent individual that I've met, or even some of the mildly intelligent individuals. I don't know if they just thought that they couldn't throw a bunch of monkeys at a typewriter and eventually they were going to get Shakespeare. But it certainly was a little bit weird. But it's kind of interesting. I still think that maybe there may be a little scapegoat to this. Maybe he didn't think he could get out of it. There were some emails sent back and forth that basically asked him about this slush fund account that he had access to. So apparently they knew about it, but maybe he just thought that there was no way to get out of it. Maybe the story, like a lot of times, probably a little deeper than we're aware of. Nokia's got their maps out for iOS, and it's better than Apple, not as good as Google. But we're seeing more and more companies kind of try to get into that map business. Like I said before, with 7,000 people in Google's map and a 5-year head start, it's hard to me to actually see how anybody's ever going to catch up with Google anytime soon. Reviews have been mixed out here, but at least they think it's better than the iPhone's map experience, but not as good as the Google one. HTC says, no way, dude. Anyway, HTC has been responding to estimates in a lot of magazines saying that they're paying somewhere between $6 and $8 per phone to Apple in their licensing agreement. They've said we're very, very wrong. No, we don't pay that much. But anyway, the HTC people are trying to intimate but cannot say what they pay. And, of course, a lot of the people at Samsung are wanting to get a hold of this for their lawsuit and drag it in. So we're probably going to find out in court exactly what they are saying. So anyway, that's it. Kindle Fire HD, they've got the new 9-inch teardown. Samsung has done pretty well. It has most all the business, including RAM, flash memory. The only thing that really is out here that is kind of a surprise is the processor is from Texas Instruments for the Kindle HD Fire 9-inch tablet. But we'll see. But I don't think it's going to change a lot of business out here. And, of course, trading Samsung's kind of a futile effort. But I continue to watch these tablets and cell phones to see whether or not there's a play in the change of components in some of these. But right now, not a big deal so far. What I wanted to get into a little bit here today, we're going to probably have to split this because I've gone far enough out here. And that is the CBO Volatility Index, the VIX. I had some very good questions. You can always email me, too, at path@tfnn.com. That's PATH at tfnn.com. But I had one of my listeners ask me about the VIX and some of the stuff we were talking about. We've talked about it before a little bit, especially about how the VIX will actually go down. And I wanted to bring up why and what the VIX actually means. The VIX is a product from the CBOE, Chicago Board of Options Exchange. Inside the VIX, basically what you're looking at is the expected movement in a percentage, actually the VIX is a percentage, of the expected movement over 12 months on the next 30-day period. It's a little complicated, but basically what I want to get in here is that the mathematics behind the VIX calculation is very complex. A lot of it is kind of a Black-Scholes model. It's based on implied volatility, but you don't have to get your hands all messy with too much of that disgusting math that gives you a headache. What you really find out is it gives you a smooth weighted figure that expresses the range of volatility in the S&P for the next 30 days. And of course, it is implied volatility. It's not statistical volatility. It's not historical volatility. It's implied volatility. So that's one big distinction. If you're watching on Tiger TV, you're going to see the formula. And it is enough to make a lot of people shriek if they didn't like high school mathematics at all. But here's some key things you need to take away. The index options are priced with the assumption of a 68% likelihood, that's one standard deviation away, that the magnitude of the change in the S&P over the next 30 days. So what does that mean for us right now? If, let's say that the VIX is around 15, I think it is right now. I did this earlier today just so we could do it. 15.6 on the VIX. So what does that mean? You take 15%, you get the square root of that by 12. It comes out to a 4.337% plus or minus move in the volatility of the S&P cash. Now, that's actually generated by the premiums that are expressed in the options for the S&P, which, of course, in the actual underlying options, not the futures. So one critical thing to think about. But what we know now is that you're not going to make any money to really speak of over 30 days in these options if it goes up or down 4.3%. So we can see that we could go down 4.5%, up 4.5%, up maybe another 2%, down 2%. It's going to you're going to have a range of about 8.6%, excuse me, of where these things are priced in, and you still probably won't make any money on the options in the S&P. These numbers are used as inputs as the into the model that generates those for options too. We're going to finish this up when we come back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we get back, I was trying to get a nice chart up here. For some reason it doesn't display. It does on my home computer. So I'm just going to talk to it verbally. If you want a copy, probably a good chance to get a copy of that chart and the data from this, I'll send you a white paper. Just email me at path@tfnn.com, and I'll email it back to you. But basically, this morning I ran through 5% on the VIX all the way to 60% on the VIX. And what you find out is that most of the time, 4.3% up or down, probably not a bad number. You can get that in a month, and that's what we're at now. So maybe it's not such a bad deal playing options even on one side when you have a low VIX. What happens, though, when the VIX goes to 60? And that is a 17-point move, or a 17% move in the S&P. The chances of that in a 30-day are fairly low, and when we see huge VIX numbers, you really have to think of whether or not there's a chance in hell that you're ever going to make money in options unless you're selling options. And that's basically it. Once I get to about 15% on the VIX, that I know that the S&P is low enough, and that's going to feed back into certain stocks, maybe not a bad time to actually buy puts, especially if you're going to buy them on expensive stocks. What you don't want to do is be buying puts even when they're fairly inexpensive on a low-dollar stock. Over time, you're just not going to get your money back on a $30 or $40 stock. Once you get to about $100 or so, it makes a lot of sense to be in a short inputs instead of actually owning the underlying equity itself and being short it. You've got your upside limited and downside, your downside limited, and you still have a huge upside. Even on a $100 stock, you paid $10. You could conceivably make back 900% if it went to zero. Again, you have to look at those kind of things and make some judgment calls. But again, probably the numbers you need to know. At 15%, it's a 4.33% move plus or minus. And a lot of people call this the fear gauge. Know that just because the VIX actually is called the fear gauge doesn't mean that it's so. The VIX is implied volatility for both plus and minus. What happens, though, is because the market tends to trend very long over up moves, you may have a 4% move, and it will stay in that 4% before the end of the month, where in a bear market, a lot of times you will blow that down. There is no, as far as the formula that goes into the VIX, there is no bias for being bullish or bearish. Experience will tell you just how fast markets go down, and slow and steady, they move up. So normally I'm a put buyer on high dollar stocks, not on low dollar stocks. And you have to have the VIX down low enough that basically you can get that kind of movement that you need to make your money back in options. So a lot of people tell you you can't buy options one-sided and make money, and that's a theory. In practice, you have to hold your shots. Like I said, in the underlying, the assumption is a 68% likelihood of one standard deviation from the implied volatility. That means that there's 32% chance that you will beat that likelihood every single month. Now, one of the questions was, how does this get into vacation days like we're going to have Thursday and most of Friday? And that is that the options that actually input to the VIX are where the changes come. You will go ahead and see the premium shrink right out of the options for the S&P, probably starting right about now and probably hitting a high somewhere around 2 or 3 o'clock tomorrow afternoon. At that point, all the premium that they can suck out for Thursday and Friday, mostly Friday, will go ahead and leave those prices, and you should see the VIX cut down. It's the exact same thing. You can't trade options, then the VIX is going to drop. And it is 30 calendar days, not 30 trading days. So if you run into a lot of days and vacation days, what will happen is that will reflect in the premium of the S&P options and automatically subtract that from the implied volatility that goes in to figure the VIX itself. So watch the VIX, watch it probably pull down as the option premium in the S&P itself gets sucked out. Give me a call, 877-927-6648, 877-927-6648.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
As we come back, we got more bad boys in news. Hewlett-Packard, they are coming out with fraud accusations, and it looks like there's going to be a lot of evidence against some of the people from Autonomy, a company they bought, and I think over $10 billion. They're going to write off about $8 billion of that. But Jim Chanos, a famous short seller, he's been short HP for a while, basically came out with these charts a year ago showing that he thought that HP was, there was something rotten in Denmark. And I think a lot of people just didn't quite understand it or want to face it. And we found out today that that's moving on. Company fell 11% in pre-market after ugly guidance, a massive $8.8 million write-off at Autonomy, the British software company acquired in 2011. Now, what's going on out here? The CEO at the time of HP, before Meg Whitman, says he's shocked. He's shocked. There's gambling in Casablanca? I'm shocked. But we all know that he said, we went through rigorous testing of their books, and that just doesn't hold water, because what we find out is Oracle went through their books because this guy was trying to push it off on them. They went through their books and came up that $6 billion was way too high to buy it. It was more like a $2.5 billion company. this CEO of Autonomy at the time looked like he's in very deep water. One of the executives of the company has come out and basically told them that there was some real funny business. My guess is that this previous CEO of Autonomy is probably going to jail because the sale happened in England. And their laws are a lot tougher than the United States here. But looks like he thought he'd be able to get by. Didn't expect the markets, at least on the tech side, to pull back. Thought he might get enough cover to get by. But $6 billion, what do they sell for? $10 billion? Looks like to be one of the biggest single fraud cases in all of history in the stock market. And like I said, they've got witnesses now coming forward saying exactly how he did do it and talking about it. And these are executives in Autonomy. And I think where they're going to get this guy is the books that they showed Oracle. Oracle still has a slideshow because this guy went around saying that he didn't talk to Oracle about being bought. And at the same time, he was kind of calling Ellison a liar at Oracle. So Oracle put up all the slides and stuff this guy dragged in. And what do you know? A lot of the phony bookkeeping is in those slides. And I suspect when it all comes said and done, that there are going to be a few people witnessing that these were the numbers that he was pushing out there. And they had no basis in reality. This guy is probably going to get fried. Just one of several problems out there today. Best Buy is still having a problem. If you've seen long lines in front of Best Buys in the news, that is because it's here in Tampa. There's a road over at called Dale Maybury. I call it Dale. Dale Maybury RFD. Because that's kind of like the big drag in downtown Tampa. A lot of shops and stuff on it, but people are already getting in line to get their Black Friday deals. And apparently, if the first handful of people get such great deals that they'll buy this stuff and then go out and resell it right away and still make some money and give somebody else a good deal. So it's almost a money-making deal now for Best Buy to do these Black Friday deals. They were down 3% pre-market today. Announced losses of about 4 cents a share. So not going out of business tomorrow, but not a good day out there. Facebook's going big brother. It's phone number retargeting campaign looks a little sad. They said that they would never share your phone number with anybody else, but apparently that is untrue. If you gave Facebook your number, they are now giving it to all kinds of people out there that they are co-marketing with. It is called phone number retargeting, and it's a way of tracking your phones as you send out updates on Facebook. They're checking to see whether you're inside their stores. There are all kinds of things that they're doing with it. But kind of funny that they're actually using this and saying that they're using it to prevent hacking, which is exactly against what they told you they were going to use it for. I expect lawsuits soon. I don't know what people are saying. More bad people acting badly. A insider trader in SAC Capital is probably going to jail too. The Western District of New York guy that's gone after some of the other insider traders has filed yet another case. He's claiming that in this case Matthew Martoma, I guess that's like Bardaroma, but it's Martoma, made about $276 million in combined profits and avoided losses by obtaining confidential information about a drug trial for Alzheimer's drugs developed by companies Elin and Wyeth. But apparently what he did was he bought one of the guys on the inside of the government who let him know that one drug was getting approved and another drug was getting denied and was able to play both sides, and in a single trade made $276 million by buying huge amounts of options up front. How someone can be so smart and so dumb, you're going to pretty easily figure out someone bought a mess of options right before a stock was supposed to move. It's beyond me how he thought he was going to get away with it. Insider trading is a problem because the only really good way to make lots of money is buy options. And once you buy lots of options, and you, of course, inside like SAC was, and you know insider information, it's pretty easy for them to look up. And any kind of statistical anomaly is going to be checked by the SEC, and was. I suspect this guy's got 10 to 15 years in Club Fed. So anyway, you can give me a call. My engineer says he calls it Dale Misery. I called it Dale Mayberry RFD. But anyway, we can get into some of the charts out here. Had some questions. It's still down about 4 points on the S&P. 2.26 billion shares. So, we did make a higher high. Right now it's probably going to come on lighter volume. I am expecting the S&P, let's go ahead and get the charts up. I'm expecting the S&P to most likely come back and retrace and retest that 1343 low that we had last week. Whether or not this is an ABC down or not, it's going to be hard to say. But one day and no follow-through makes me think this is nothing more than short covering at the moment. Could we get another bounce? Yes. Am I actually putting a position on or more positions on? No, I've got one position in energy. It continues to do well, especially in a flat market like today. I'm kind of happy on its movement. But you can always check out my newsletter for a free 2-week trial at tfnn.com. Just go to the front page and look for the Path of Least Resistance newsletter. You're going to find some stuff in there about the VIX, along with the chart and all the percentages that go along with the different VIX numbers. So it's going to be interesting. Anyway, I wanted to get to the S&P out here. Let me go ahead and bring that up. We did exactly what we were supposed to. I'd been showing it for about 3 weeks, and that was the confluence numbers on a greater time span. Let me zoom in here if you're watching on Tiger TV in the Den. We went exactly to where we were supposed to, actually a couple points lower than where confluence was supposed to show us. We have bounced with one big day of short covering. Could we get into slightly higher prices Friday, maybe Monday? Yes, but we're already getting into what looks like a 381 retracement. We could get into maybe a 0.5 retracement, or this could be the high right here. If we continue to close lower than 1387, which is where strong resistance is in this market. If you remember, while we were going down, 1387 was where the most resistance on the downside was. It took a little bit of consolidation and congestion for the market to get through. Once it did, we lost all that in a big hurry. That we popped right back up to it is pretty good indication that that is where fairly decent resistance is. And again, I'm not talking about the next few minutes. I'm talking the next weeks and months. So what can we do? I think right now, if you're trading on a very short time frame, maybe you can make a few bucks, but it's going to probably not be a whole lot. You're limited to the upside. The downside, everybody's been through, and you're going to probably need a little bit of time. We may need even enough time to go through the end of the year before we open up for the next round of selling. But until I see volume, until I see a sign of strength out here, I continue to think that we've got a market out here that's ripe for an ABC down. If, just a little higher, maybe we do go up to 1395, something like that, 1403. Wouldn't be impossible to see that maybe next Monday. And that may be a really good time to start planning on the next leg down in this marketplace. But of course, a lot's going to depend on what they report for Black Friday sales. Those all won't be in on Friday, but by Sunday night, we're going to have a very good idea of what sales are in the marketplace. A couple of stores like Target and Walmart are going to be open Thursday nights, so we may have a little bit more news in Friday that we normally have. But we had a high volume low down here, 4 billion shares, not a monstrous low, but that suggests that before we're going to get a very good rally, that 1343 is one more time going to get tested, or at least we're going to get into that candle. If we see very, very light volume in that may be, let's say we go back Monday, Tuesday, test those lows. Volume is one more time, very light. We get into it, well, let's say 3.2 million shares, something like that. We may have the bottom to set up a short squeeze all the way through the end of the year. At that time, maybe then it's time to go ahead and turn around and short maybe the first of the year. I think most of the tax selling we've probably seen is over. So let's get to some stocks and see what's actually moving out here in the market, at least in the NASDAQ 100. I always like to go through those real quickly and see what are the stocks. Did I get that? Am I right? Yep, NASDAQ. Okay, so let's take a look at what we got out here. Nuance Communications, it's off about 6%. Let's look at that in UAN. Of course, they're the people in the software that makes Siri possible for the iPhone. But of course, previously the bunch that were doing the Dragon Communications, that a lot of ads on TV now. Nuance is actually kind of split from them. Not exactly sure how that all came about. But what we have here is enough volume at these previous lows to suggest that this will break and go lower on a day where a lot of people were a little better. Another high volume day out here, 5.7 million shares already. We're actually driving down here for the $19.33 low from June 4th. 5.1 million shares. We're a buck, 70, 80 cents above that. Certainly plenty of volume to get down and test that 1933. The volume remains high. Look out for this one. It could go down to $15.56, which was the August 8th low of 2011. Not so good news out there. Apollo, of course, one of the Walking Dead stocks. Just don't know when it's going to blow up. And of course, it's so short that it's hard to play because they're always popping and dropping this thing, but one day it's over. Probably the biggest news out here is Intel. I talked a little bit about it yesterday and the CEO leaving. But what we have today is a little bit more news. And part of that news is the way that the Intel CEO left. He was not retiring. He was let go. And market's not responding great to people firing people in this marketplace. Didn't like it with Apple, didn't like it with Microsoft, and today it's not liking it in Intel. It's broken that big number that you wanted to see stay above 20 out here, so we'll keep an eye on this when we come back, finish up the show. Give me a call, 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get
get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
2.35 billion shares so far today on the consolidated New York Stock Exchange tape. Means that we're probably going to come in somewhere around 33.1 billion shares. Again, we had 4 billion shares on the low, and you know it's been a low volume market here for the last 12 months, 18 months, something like that. At least compared to what we've had before. Part of that is probably a drop off in high frequency trading that got us up to those astronomically high volumes of 5 and 6 billion shares a day. But we're still off 3 points. I suspect that we're probably going to muddle around here, close 1382, something like that. Probably see a little pullback into tomorrow. And unless we get some really big news, probably flat trading on Friday. We're more likely to see a lot of action on Monday when we get a little bit more news out of this market. Of course, a very light trading day on Friday. You can see briefly some very sharp movements on a Thursday when you close at noon. We will be closed at TFNN that day. But we can continue to see, some nice moves out here. But I think it's going to be Monday. I just don't see a lot underlying this market to actually move it. We've had our short. We've had our bounce. We've had 2 days to actually move this. And it's just, we're just not getting anything out here in the way of the volume that suggests that we've started a new bull market yet. I'm still looking for that, that 1345, 1543 area to get tested one more time. I'd love to see that maybe happen on Friday or Monday, and then maybe light volume that sets up the short squeeze and bull market through the end of the year. Of course, we come in with higher volume than we've made and started an ABC down. And looking at the low 1300s is not a problem. But we'll take a look at that. Now, when we look at the stocks moving today, and this is another, I think you can go back 30 days and look at and listen to our show. One of the things I said was the big clue that we were going nowhere but down on the election day, and I was already short and glad to see it, was that every stinking stock, and I mean every stinker out there, was on the high end of the movement of the NASDAQ 100. And what do we have today? MCP up 4.5%. Green Mountain Coffee Roaster, perennial brownless stock, a little over 4%. Dollar Tree, 2.6%. Sears Holding, one of my Walking Dead stocks, up 2.5%. Whole Foods off the top, but up 2%. Vertex Pharmaceuticals up 1.7%. Baidu, which was $130 stock not that long ago, 1.7%. Priceline, not as stinky as some of the others, but up 1.4%. Amazon heavily shorted, needs a little of this short to burn off to get another swing at this guy. We've hit it twice in the newsletter. First time for 150%, second time for about 75% on the options. And I think this thing's setting up to go to 180, but we'll have to wait and see how, probably through Christmas before this thing weakens again. Probably take another swing at it in January. But we've got other stocks, Bed Bath & Beyond. A lot of these stocks have been beaten down so far. They're just not going down much farther out here. BB, I don't have time. Already out of time. We're going to see you tomorrow. If we don't see you tomorrow, you have a safe and happy Thanksgiving. Be thankful out there. I am. Have a great evening.